One. Hello, everybody. I'm Rob Smith of the Black VTF here, T3 Live, and it is a night session. It is February 9th, 2016. We're going to dedicate this to my dad. He passed away 2 years ago today, so here's for Pop. And usually in night sessions, what I do is I record for a week. I'm sorry, I record for a week. I record for an hour, and then I cut it, and so the recording's only an hour. Tonight, I'm going to keep the recording going. So I might take a break after an hour, but I'm going to record for everything we got here because this is going to be a really important session. I'm glad that everybody's showing up here. And what I'm going to do is obviously my initial energy comes through when I go, "Hello, it's Rob Smith." We're going to pull it back real slow. We're going to pull it back slow, all right? Because this is for people who really want to understand first what we're talking about, what the strat is, and get into the deeper stuff of how to track it, how to trade it exactly, because everything's great. A lot of things are great in theory. The question is, how do we actually execute it? And that's what we're going to get into. So, first things first is that I've been very adamant about why I came to T3, is that it's without question very adamant that trading should be at least a two-person job, if not a computer's job. And we'll get to that, but at least a two-person job. And so when I came to T3, it was listening to the VTF, and watching the traders' positions. And I told them, I was like, that's not the model. And they said, no, that's the model. They just want to watch the successful traders' positions. And I said, no, that's not the model. The model is we agree on why things work, how things work, and then I will direct the trading. And they said, all right, Rob, well, good luck with that. And 5 years later, here we are and doing very well. So, what we want to do is we want to agree on the criteria that we're going to be trading on. I watch it, you execute it. And I don't think that there's any dispute there that that's been a better idea because it's very difficult to monitor positions, move stops, monitor the market at the same time. All that stuff at the same time is very difficult to do. So that's why I came here. That's why we do what we do. So in a very basic level, that's what we're trying to that's what we're trying to do here, right? That's what we're trying to do here. We're working as a team, and so when you're in the Black VTF, it's you and me working together. And so one of the things I don't want people to do is don't put me on a pedestal and say, "Oh, well, Rob is the Messiah, the whatever he is, the guru." No, no, no. We're a team. If you don't make money, I'm not doing my job. Period. That's the way I see it. And that's why I sit here and I answer emails and I do these night sessions. I'm like, if something's not working, I need to know why, and I need to try and to do my best to solve that problem. And that's why we're a team. So although it's a community, it's also one-on-one, me and you, me and you, me and you. So communication is very important. If you're sitting, I mean, there'll be people that lurk for months or years. They're like, Rob, I know what to do. You just keep talking. That's great. And then I get people who will, I've never even heard of, never posted, and say I don't get it, then I'm leaving. I can't help that. We need to communicate. Period. I need to know what you do. I need to know your risk profile, what you're doing, because oftentimes during the day, you'll hear me directing certain trades to certain people, right? And you may be like, who is that? It's like, I know certain people's real names, right? I've met a lot of people. And one of the things I really would like to do soon or than later is have another conference. We've had multiple in the Black conferences where everybody gets together and you get to meet people face to face that have been doing this for years. And what you'll notice is that people that trade the strategy are similar to me as far as being able to share. and saying, look, we know you're not going to get in our way. And Alvin, can you hear me? Okay, you got it. Okay, Alvin. Okay, sorry. I was all right. So that's good too. So to start off, all right, we're going to go real slow on, let me finish on a few more things, I guess. What I want you to be able to do is that, first of all, if you've never sent me an email, I have no idea who you are, do that. Tell me who you are. What's your setup? What's your experience? Do you have to make money tomorrow or are you going to get kicked out? Do you have, everybody's situation is different and that's going to affect your trading. Your mental trading, that's going to affect it. When I know somebody's got a gun to their head and they got to make money tomorrow, that's going to be tough, right? If you've got billions of dollars, you're going to probably want to sell some option premium if you got certain things. I want to know who you are. And then as we grow as a community, the community knows who you are. You don't have to be, wide open, but that helps too. All right, so let's get to the very basics, and it might take a few hours to get into some more of the serious stuff that I want to get into, but I want to get into the very basics for if anybody could type in Y for yes, if you're brand new to the strategy, if you haven't heard anything about it, 2 weeks, 2 weeks or a month. This is absolutely brand spanking new. Okay, so it's not brand spanking new. All right, let's get into the meat and potatoes then. So basically, the strategy is based off universal truths of price action, right? And so there's the first is time frame continuity, all right? And you want to know that. And I talked about it in the webinar today, but time frame continuity should be very simple. You should have a screen up, a dedicated screen to whenever you're looking at anything all day long. One screen has a monthly chart, a weekly chart, a daily chart, a 60-minute chart, 30, 15, 5, right? You should have that up. Why? Because that should be very simple, all right? Because if you pull up the SPY and you go, okay, is it red? Yes, it is. Is it red? It's doji. But when it's down here is red, it's up here is green. When you do this, you're going to see things very clearly. Is what I'm buying or selling going up or going down? Right? That's what we want to know. Time frame continuities should be very, very basic. Is it going up or is it going down? We gauge that by the color. It's like actually we base it on statistical basis on where is something trading from the series of openings, right? And so is everybody understanding that? Like I said, I'm going to go nice and slow on the very basics, and then we're going to get into how to track it, what I'm saying during the day. Like I said, communication's key. So if I put Y or N in here would be helpful. Everybody understand that? Time frame continuity is good. Time frame continuity, the upside is something trading higher than it opened on the month, the week, the day, and the 60. At that point, there's no one that can dispute that the price is rising. Okay? No one can dispute that. If it's going to go down, it has to go down and turn the shortest time frame red first. Nobody can dispute that. That's the basics of time frame continuity. So the second most basic is actionable signal. Why would the price continue to go up or down? The price would continue to go up or down when an equilibrium is met or there's been what people would call a shakeout one way or the other. And the rev strat is always the hardest for people, but for the most basic, when you go inside, right, the inside bar is the most key. It can tell us when we want to sell option premium it can tell us when we want to be directional. So if we go to the SPY 60, what did we know? We had a few ways to play the SPY today. Now, granted, the SPY is a proxy for going down the road to more things. TQ. The SPY is a proxy for what we know about other things. So, when people all right, Camille, while I'm still here, see what you can do, and this will be recorded. So the SPY is a proxy for other things. The Qs are a proxy for other things. The SPY is a proxy for all the 500 stocks in there, and the sectors and the subsectors, just like the Qs, the small caps, and the Dow Jones Diamonds. All right. So at the point where actionable signal inside 60, and if people get bored and say, Rob's talking too slow or whatever, if you take anything from this, all right, during the day, you want to know when any of the futures go inside on the 60. Did the SPY do it? Inside 60 here. It's so important that you do that I remind you during the day by going and ringing the bell. Do you know why? That's come and get it. That means come and get it. Because when this breaks, right, this is an equilibrium in the future. So you might say, Rob, 60 SPY, it was down like 10 cents, whatever, right? If it's going to make a big move, that's what it's going to look like, first of all. Second of all, what that does is it alerts us to things we know already have time frame continuity, full time frame continuity, at this point to the downside. There's no reason to believe they're going to go up when the futures are going down. So what this does is it relieves any arbitration what it relieves is any futures pressure. And so what I mean by that is if your stock is in the S&P 500, right, and the futures are breaking an equilibrium to the downside, that you can expect at least marginal selling pressure because of the futures, right? That's a technical mechanic. That's true, right? If it's already in trouble and has full time frame continuity to the downside, that means there's already natural sellers in there, and you're getting futures pressure on top of it. Now, it might be marginal, just down a little bit, but that's what we want. We want to know about that, because if it's going to really fall apart, that's what it's going to look like. Now, conversely, in this same situation, it was still inside the opening range. So all this business here was still within this range, still consolidating. So the S&P itself, at that point, although was going down, wasn't our ideal play. We wanted to go after stuff that was getting murdered, like your HCN, right? HCN, full time frame continuity, the downside, actionable signal, weekly down, going down on all time frames, right? So don't get caught up in that because it's the SPY and you don't have anything else as of right now, that's the actual trade. What that's telling us is it's alerting us to anything that we know has actionable signals or multiple actionable signals to the downside, full time frame continuity to the downside. We can expect them to not only have physical pressure from the futures, but mental pressure, because at that time that anybody who's watching the SPY is watching it drop. Now, to be fair, why would it reverse back up? Because it's still inside on a longer term time frame. You want to know about that because it's still consolidating. Also, at this point, the SPY did not have full time frame continuity to the downside. It had a chance to do it, but it didn't do it because we opened here. Therefore, as much as you wanted to think the SPY was rolling over, we did not take out the opening today in the S&P. We did not. We were a green day, right? You want to know about that, right? Because although, remember, the opening rally was huge, and we retraced a good portion of that, at the point of the retracement, we still were green on the day, right? That's conflict. You want to know about that. We were also at that point still inside on the month. Anytime you're inside on a longer term time frame, you want to know that, because when people, the strategy is basically quantified all price action. So I'm not saying that makes it easy. What I'm saying is that once you understand what I'm talking about, nothing surprises you. Don't say, oh my God, oh my, blah, 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 blah. No more. I got flat footed. I don't know what I'm doing. I don't know what the market's doing. We know what the market's doing always because it's defined. Why would it do something? Why would it not? What is it presently doing? What's the present condition? Once you understand time frame continuity and inside bars alone, nothing surprises you, especially when we move on to the triangles. So, are we clear about that? Is everybody clear about time frame continuity? And I can get into the actionable signals a little bit deeper because we haven't talked about the rev strats. I have a video on that, but there's a lot of new people on. I want to make sure that everybody's clear at least on time frame continuity and a slight understanding of what I'm talking about with actionable signals, because we get to that. So let's stay on actionable signals. We could, and Jen, and please communicate. So we could trade with no charts, very simply. And this is coming from the guy with more charts than anybody. Because we've quantified this, we don't need charts. It is what it is statistically. The price is either rising or it's dropping. It's either inside other prices or it's not. All right, so we will use hammers, shooting stars, and stuff like that for actionable signals. But ideally, we want the inside bar because it's an equilibrium, right? We want to see that. So as ugly as this looks on the SPY, it's not taking out last month's lows, not taking out the Jan lows. So at that point, if these sellers fail, couldn't take out the lows, anytime we start popping up like you saw on the 60, they got to cover. And look how it's like I can stay short against this all day long, right? No, you can't. Cover. I can stay short against that. Wrong. Boom, you're stopped out. I can stay short against that. Wrong. Boom, you're stopped out. Stopped them out 1, 2, 3 times. Now inside 60 close, right? So if we come in tomorrow, have we seen this similar stuff? Yes, we have. Walk it down, stop them out, peak. Corrective action. So how do we know what to do? How do we know statistically what's going on in the market? We know because we know how many stocks have actionable signals in force. You get an Excel spreadsheet every single night that tells you how many actionable signals are to the downside on the monthly and the weekly, and to the upside on the weekly and the monthly. That right there is your blueprint of what the market is doing. I don't care what people think when they look at charts, it's irrelevant. How many of the things in the S&P are rising in price? How many are going down? How many can we believe that are breaking equilibriums are going up or going down? That's going to tell us. I got an email tonight that I answered about this morning and saying that foreign markets were going down severely. I thought we would continue. One of the most important things to remember is that 2 of the 4 major time frames start right on the opening. So whatever we have, the best laid plans of mice and men go out the window on the opening. 2 of 4. And the most important are those 2. Why? Because that's what's happening right now. So we could have everything going, it's like, the monthlies are going down, the weeklies are going down. We open today and start going up. I got news for you. Right now, we're going up. Two are countering the other 2. And if it's going to change the weekly and monthly back up, that's what it's going to look like. The 60 and the daily are going to be green. What would change the other time frames. Now, once that stalls, once that stops, like we saw today, anytime that the six now here full time frame continuity to the downside, right? I'm sorry, that was 60 here today. We never took this out. We never took that daily out. Now, whenever anywhere red here, we're red on the week, red on the month, and red on the 60. If we're going to take this out, that's the condition we would have been in. But once that 60 closes out and doesn't do it, we're at risk. Why? Because now 60 is green and daily is green. Those are our most immediate time frames, right? So at that point, anytime that this 60 is green above that daily, we can be looking at stocks we know have full time frame continuity to the upside, all right? There's no reason to believe they're going to go down if we're up on the day and up on the 60. Today, we're going up, right? So anything that's full throttle upside, no reason to believe that's going down. And when I say inside, do I mean the last bar or it's inside or engulfed? No, the last bar. So when I say inside, it has closed. The bar has to close inside of the previous bar's range. So at the end of the day, I was like, there's almost no way we're taking this out, right? Because the last 60 is only actually a half an hour. I was like, so it's inside this range. This is an equilibrium, right? And that's the basis of actionable signals. It's an equilibrium. At some point, somebody has to take the direction of that equilibrium. Because at this point, buying and selling is even. It's like, buyers, are you guys tough? No, we couldn't take that out. Sellers, are you guys tough? No, we couldn't take that out. Well, next step, no, you go first. No, you go first. No, you go first. All right, next step, somebody's got to try and take that. All right, how much size do you got? How many shares do you have? You have 500,000 shares to buy? All right, take a shot. I got 2 million to go. 500 print, bam, send it to you. Right? So it needs to close. So as it pertains to beginning to not just understand what's going on, but how to track things, what's important as far as what you know from the spreadsheet, from the video, one of the first things you want to do is, and I want to be clear about this, and this is strictly my opinion, if you are already a successful trader, I want you to keep doing what you're doing while you learn this. You will understand why you're successful, right? You will be able to quantify why you're successful, and I can put you into more successful situations because you're already doing something that works. And everything that I'm telling you, anything that you do is defined within the realm I'm telling you. The strategy has quantified everything. If you are marginally or struggling, I want you to forget anything you've ever been taught. I want you to throw it out. Throw it out. All right? I want you to speak the language and only the language of strat. Because we don't speak in my humble opinion. We only speak in fact. What do we know to be true at any given time? If I don't know something, we certainly are not going to go in there, right? If we are running out of time on something, we are not going to go in there. What do we know to be true about anything we are going to trade? And speak in the language of the strat. Rob, I want to take this because I think it looks good. Wrong answer. Right? I'm taking this because it's up on this, it's up on this, it's inside up and that. Right? That is how you're going to speak and think. People will use other things, moving averages, what have you. I'm going to tell you, if you're struggling or you are marginal, not to do that. And yes, the spreadsheet is available to members in my room. We have codes for the TC2000. We have every tool that you could ever want. We're building better every day, right? And so I'm going to get to the spreadsheet in just a second, but I want to be very clear about this. If you're marginal at best, I want you to throw out what you thought you knew, right? and I want you to think in only terms of what I'm speaking. You have to believe that and understand that this is the truth. We are only speaking in terms of fact. That will help you to see things how they really are. Am I, and speaking out loud is also a good idea, and not just cussing on your losers. Because when you have to speak out what you're doing to yourself, sometimes it sounds so stupid you're not going to do it. If you're just doing it off a thought, you might do it. I've been trading a long time. Be like, oh, you know what? I'm just going to buy some. If you say that, you won't do it. If you say in the language of strat, I am buying this, and I don't care. Even if it could be like, I'm buying it off the oneer. It's full time frame continuity to the downside. It's going looks like I'm still buying it off the oneer. That helps you to define what you're doing. When you enter an order, speak out loud the reasons why you are doing it. This is why I am entering this order, and I don't care if you miss it. Be like, well, I had to give my full speech and it got away. But this helps you to think in one criterion terms. You are doing this because, right? And when you do that and you understand the language of the strat, a lot of the times you will throw it out and say that I can't do it. It even sounds stupid to me. All right? Let's see. And Scott, since the first hour has two actionable signals, should new people not trade in the first hour? Good question. I would say normally yes. I would say yes. You might not have to wait until the first hour. You can wait until the top of the hour, at least 15 minutes, because in 15 minutes we can get our first inside 15ers. In our first half an hour, we're going to get our first 15s. So for new people, certainly you can drop back, and people have been very successful on the opening, without question. Mike Lee's made a career out of it. It's not for everybody. It's one of the things you'll hear me say a lot is don't get caught up in the allure of the big move, right? In the allure of the big move, where things move on a lot of volume and a lot of stuff on the opening. However, as far as the strat is concerned, we gain more evidence as the day goes on of what's going on. So don't be afraid of the allure of the big move. We want the easier one. So something like today, where like Viacom B, you heard me talk about this thing getting destroyed all day long. And when there's something like this, ideally, like I said, I want to know who everybody is. Ideally, the strat was developed, first of all, because I needed to quantify stuff because I was driving myself nuts trying to figure stuff out, right? But ideally, we want to create winning positions. Because a losing position, first of all, never made anybody any money. All it does is lose you money, and it takes away your time, it takes away your buying power, it takes away your mental capacity. Now, if you can create a winning position, no matter how small it is, we can work with that. We can add to it. I can mold it. I can do anything with a winning position. With a losing position, my mental game is gone. My buying power is drying up. I can't go to winning positions anymore because I've got to manage this loser. Meanwhile, everything else I thought was going to work is working, but I'm staring over it here. So I don't want anybody to hold any losing positions at all. Zero. All right, Harry. Well, Harry, outside of scalping the strat today, some people had a tough day. But as far as knowing the short-term strat stuff, there was a lot of good things to do. And if you're caught on the wrong side or you're trying to put fires out, you're not going to be able to catch it. And so ideally, we want to create winning positions we can work with. And I know sometimes that can take some time. You'd be like, oh, okay, I got stopped out. I'm like, okay, keep doing battle. That's okay. That's okay. Just get it on, but don't sit there and hold on to it a loser. You get stopped out, and it's okay. I have no problem getting stopped out 3 times before I get the move. But then we can work on it, right? And Scott says wait. Yeah, personally does wait much better waiting for an hour, and that's fine. Like I said, this is for newer folks, but also, um, just a little slower, where we can have a good conversation about how the hows and the whys and getting it down. Because one of the things I really want to get done tonight is a lot of the the biggest problem or issue, I should say, or challenge since I've been at T3 is that I produce a lot of information. This is a lot of information. There's no question about it. When you're talking about statistical analysis, this is a lot of information, right? At any given time, as soon as that 60 goes one way or the other, all of a sudden, bam, these 200 are full time frame continuity to the upside. Bam, it ticks down a couple pennies. Bam, now all these things are full time frame continuity to the downside. How do I possibly track all this stuff? So, depending on everybody's situation, like I said at the beginning, whether you need to make money today or you can sit back for a year and just learn, you're going to spend more money by not taking your time to learn. And so, watching the video that I make after the close, you want to watch that right after the close, and you want to watch the video I made the night before. And the reason is, what did we talk about? What happened, and what could you have done? Now, when I worked on the trading floor, I wouldn't do my research at night. I have to do that to get this out because it's T3 and how we do it. The reason I wouldn't do that is because overnight futures could throw out a half or 3/4. My research is gone. I'm like, okay, here's all the short side setups. Boom, we gap up, 800. It's gone, right? So sometimes there's nothing to it. However, you want to see, because I'm only talking about actionable signals, triangles, all that stuff in the video. What could you have done? What worked? Why did it work? Right? And so watching the video right after the close is very important. You also want to take your time on the weekend video. The weekend video, I know, is vast. All right, it's vast. So you want to take notes on that based on your risk parameters. Now, not everybody's going to be trading the Googs and all the big movers, right? I know that. Not everybody's said Utes are too boring or whatever you want. Because you'll notice there'll be a focus when I talk about things in the weekend video. And say, if this, then these. If this, then these. This is the most actionable signals. However, when we have a ton of actionable signals, more likely the following week is easier because some break, some rev strat, some do this, unless we get a simultaneous break. So taking notes on the weekend video, very important. You can also put down time that I spoke about something. Say, Rob talked about the financials at 11:30. Rob talked about the oil stocks at 32.05. Just write it down. So you don't have to watch the whole thing again. You just go bam. You'd be like, all right, oil's on the move. We got this. Boom. Just go back to the weekend video, 31:30. Boom. We got 10 minutes of oil. So you want to know all that stuff because during the day, I'm pretty good, right? I'm pretty good. But not only sometimes I'm like, it's inside 30, and some people are like, Rob, it's in conflict. Why would he call that? I'm like I said, don't put me on a pedestal. I'm doing my job as best I can, but I want you to do your job and say, okay, what do I know from the video? This thing, and from the video, will give you the longer term setups. But during the day, like I said, you have one screen that has that monthly, weekly, daily. When I'm calling things out, when I'm going around the horn, when I say I'm going around the horn, we're going to look at the 60s, we're going to look at the 30s, and look at the 15s. I expect you to be following with me, right? I expect you to be following with me. Like, all right, this is inside 60. Boom, pull it up. You have your screen with the monthly, weekly, daily, 60, 30, 15, 5. And be like, no, Rob. Nope. No. Oh, yeah. Right there. Boom, write it down. You're looking for a combination. We want a combination of these things, right? I can't be more clear about that. Two things that people have problems with right out the chute. The first one is that the belief that you need to get the initial break. You don't, right? And say, oh, I missed it. It's inside month and down. I needed to get it right on the monthly break. You don't. So long as the monthly is in force, you're looking for combinations thereof. All right? So anything that is inside month and down, you can look for a weekly confirmation, a daily confirmation, a 60, a 30, a 15.5 with time frame continuity. You don't have to get the initial break so long as that time frame is still in force. All right? So I get that a lot. I missed it. No, inside day and down, I'd missed the inside day. That's okay. Once it's inside day and down, that equilibrium has been broken. That's still in force, right? Until it expires. So it's like the dam breaking. Once the dam breaks, man, let's go. It's like, oh, I missed the dam break. No, dude, the water's pouring out. We're still rolling. Until the water dries up, dude, it's still going. And so as long as that actionable signal's in force, still good. Bartster, how many positions do you have on an average day? I trade very minimally for myself because I have people who trade for me because I believe it's a two-person job. The only thing I'm going to really bang out for myself is VXX all day long, but that's only sparsely. It's VXX, I'm 100% believer in just trading that all the time short, right? And so I have people who trade these for me. And so as we get more automated, I want to catch it all. And one of the reasons I came to T3 is like, I don't care if everybody knows this. Rob was like, well, they were like, well, Rob, what if everybody knows your secret? I'm like, it ain't no secret, dude. This is the truth. You can't. Price action cannot trade the way I'm telling you. So even if the whole world knows it and they all build algorithms, doesn't matter. It has to trade this way. They're going to get rev stratted. It doesn't matter. That's the beautiful thing about it. So it's more important, Bartster, that I know what you do. What are you comfortable with? How many? Not everybody can manage a bunch of positions. You know what people can manage? Winning positions. They can't manage losing positions. So when I talk about creating winning positions, is that you should be properly hedged because you're only buying things that are going up on all time frames and selling things on all time frames downside. Now, not everybody's going to do that. As you get more schooled, yes, I am recording, Hayes, thank you. As you get more schooled in this, right? One of the issues that people would come to me early on is say that, well, I want to buy things that are oversold or overbought, and I want to fade the move. Fair enough. There's ways to do that. You just need to know how that's going to work within the realm of the strategy. So in here, on the 60 gaps up here, see this shooting star? Could we have taken this down? Sure. Why? Because that's an actionable signal. It's also in a higher high. Boom. Right there, gap fillage in the village. Right? Anytime you go to a higher high or anytime you go to a lower low, you're at risk of reversal. So there's ways to do everything. Everything is defined within the realm of the universal truths, without question. Because a lot of people say, well, I want to buy it cheap off the bottom of the triangle, but how could I possibly do that if the price has to be going down, right, to get to the bottom of the triangle, does it not? Yeah. But It's when does something occur. So, although some people believe that the reasons they're right is true, oftentimes it's false. So you've seen guys say, I'm going to buy something on Friday for Monday, right? Like, you're out of your mind. Like, 3 of the 4 major time frames are starting over. However, and they're buying it because it's puking, right? However, it works out and they think they're smart. But in actuality, the reason that works is because time frames have exhausted, and so that the sellers have done what they're going to do, and it pops back up on Monday because those sellers are gone and there's new participants. It doesn't work because it's oversold. That's why it works, right? So, let's see. Everybody following along so far? I know it's a little bit more of a pontification tonight, but just to make sure everybody's following along so far. Because we haven't got to the triangles. We talked about actionable signals. We've talked about time frame continuity. And so the important part of understanding this is, and let's not bring in colleagues or anybody into this, but okay, that you need to understand that price discovery does work in a series of broadening formations. It doesn't have a choice. And so I don't care what anybody says. They say Head and Shoulders, they say this and that is wrong. It's irrelevant. I mean, one of my favorites is like, oh, it's a Head and Shoulders if it goes down. I'm like, really? Okay, great. That's too late. All right. So you're telling me you can't define a Head and Shoulders until it works. How is that going to help me at all? It doesn't. Right? It doesn't. And that's what proves that it's not real. It's a, like I said, the genotype phenotype from biology. It's like, oh, that's what it looks like. It looks like a head with 2 shoulders, right? Well, the genotype is it went down because of this. Your risk was this because of that, period. The reason that the broadening formation is the only pattern is because it's actually not a pattern. What it is it's just a representation of price discovery. All right? Price discovery, and put it this way, how many people have been taught over the years, oh, if it holds this level, I'll stay long. If it holds this level, it holds this level. How often does it do that? Almost never. Why? Because either you break out and you hold your breakout, or you don't. And if you don't, profit taking sets in and shorts come in, right? That's it. So just in this Dollar Tree here, it's like, oh, right here, this thing looks like crap. This thing looks like crap, right? All of a sudden, boom, it gaps up in here. Now it's the best looking stock. Oh, yeah, we'll stop all these guys out. Giddy up, go. So at this point, does this stock look good? Everybody in the world says it looks good. Now they might say, I'm going to buy it on a pullback, right? Then I'm not buying it right here, but oh yeah, I'm going to buy it on a pullback. Oh, what happens? It pulls back. Oh, the same guys who said that, are they buying it? Oh, hell no. Now it's a top, right? Now it's a top, right? So we can short against that. Okay, puke. All right, come into here, and it comes back up. It's like, oh, no. It's like, remember we wanted to buy it. Yeah, we'll buy it off of this stuff. Okay, you're stopped out. Bye, gone. Oh, we can stay short after this thing. Oh, yeah, screw this thing. Boom, we're short. We can stay short. We can stay short off of this, this, and this. Ready? A bam, a bam, a bam, a bam. All you guys are gone. Boom. Now everybody wants to be long is long. Shorts are gone. Okay, now you're free to puke again. Oh, we're definitely getting short down here. Let's load the boat. This one is a real igniting bar. Let's get loaded. Really let them have it. Yeah. Boom! Right up. Oh, let's get short against here and here and here. Oh, for sure, this time's got to be the real breakout because, I mean, these are all the fake outs, but this has got to be the real one. Let's really get loaded on the long side. Yeah! Boom! Down. All right? This is how price action works. All right? And this is just Dollar Tree. It happens on a 1 minute. It happens on a monthly. All right? And so the longer the time frame, the bigger the positions of the participants who can't get out. This is what causes price action to move. Price discovery, the level of aggression of buyers and sellers, and people positioned on the wrong side. So I don't care about earnings. I don't care about anything, right? How aggressive are the buyers? How aggressive are the sellers? And how many people are tracked on the wrong side? And how do I know that? How do I know that there's natural buyers or sellers in a stock? I can say that I know that because time frame continuity. If it's going up on all time frames, there's people buying it on the 60-minute basis, the daily basis, the monthly basis, the weekly basis. There's buyers. There's a natural buyer, and there's no question, at least one, right? No question about it. Okay, let's see. Rick, how you doing? A regular equity trading day has 6 complete 65-minute candles. Does your technique need to use this 60-minute candle or 65-minute be substituted with the same effect? Good question. Definitely can. Because what we're doing is we're identifying participation groups. So do I prefer them to be more uniform? I do. Is it necessary? No. Because you're still going to have an inside group. It's still going to show you what that 65-minute group, how they're positioned. Did it go inside on the 65? Yep. All right. That gives you an extra 5 minutes of guys who are stuck on that equilibrium, without question. So no, any time frame could work. You could do it on a minute and a half. You could do it on the sideways 30s, the 15 to 45, anything. Because all it is a representation of the participation group from X time to Y time. So my 60s update on the bottom of the hour, that's what I call the flip, because that gives us our new 60 benchmark. And my software has always done that. I've been with NeoVest forever. But I had no reason to change, because what I noticed when I developed this was that things move on the bottom of the hour. And as I thought about it, the market opens at the bottom of the hour, and as much as CNBC will say, okay, the closing bell, the most important hour of the day, that's BS. Where they close doesn't matter. It's irrelevant. It's where they open, because that's the direction they're traveling for the rest of the day. Where they close, be like, oh, it closed above that. I'm like, okay, get in there. It's like, for all I know, it's the last shorts getting squeezed out, and they close it on the highs and be like, it closed on the highs. I'm like, yep, and there's no shorts left, and everybody's long. See you tomorrow, puke. Right? It's irrelevant to me. Right? Right, BP, and we can see he's saying 5 minutes into the actual right. And we'll notice that too. We'll come in there and be like, it's exhausting, but sometimes it will exhaust hard into that flip. And that's why we're watching all time frames. But I wanted to be very clear that any time frame that you watch is a representation of a participation group. So one of the important things today was what I call the uncoupling, right? Is the uncoupling. Today was a very uncoupling, because today was the first day in February that I could identify 4 participation groups, right? So we want to be aware of that. It doesn't mean we can't trade. It just means I can't identify 4 participation groups, because from the opening of the month last week, the weekly and the monthly were all the same bar. To start off this week on Monday, the 60, the daily, and the weekly are all the same bar in the first 60 minutes. And the daily and the weekly are all the same bar all day on Monday. On Tuesday, the daily and the 60 are the same in the first hour and the second hour. Now I've got a separate opening for the month, the week, the day, and the 60. Right? And so that's important. Now going forward, for the rest of the week, as we go on, I can see different participation groups. Okay. So that's important, because when things occur are as important as anything. So you've heard the term turnaround Tuesday, right? Right? Turnaround Tuesday. Why would that occur? Why would things turn around on Tuesday? When things occur are important. So just as the uncoupling is explained on how we're tracking the course of the month, it's also important how we track the course of the week. If you've ever been on Twitter, you've ever done your own research, everybody has an opinion on the weekend. Everybody. Oh, the market looks like this. Oh, the market looks like that. The market looks like this. Everybody's got an opinion over the weekend, right? And what happens? The market opens on Monday, bam, it all goes out the window. Oh, I thought that was going to be a good buy, gap down, all goes out the window. The most important research is done on Monday night. And the reason being is that 3 of the 4 major time frames start over on Monday morning. Right? So I don't care what you think you saw over the weekend. I really don't care. Now things go into motion. So, whatever happens on Monday is either reconfirmed or negated by the signals that we get Monday night. So if there's ideally what we want to, and when you come in on a Monday, Monday's the most difficult because of those 3 time frames are the same. So, but ideally, what we'll see is one move. I mean, ideally, what we want is a simultaneous break. When I say simultaneous break, that means the shorter terms continue and either continue or cause the breaks of the longer term. The inside 60s break the day, break the week, break the month, and that's when you see oftentimes on the first of the month a big move up or big move down, right? Simultaneous breaks, right? More often than not on Tuesday, what we get is inside bars from Monday and an original directional move on Monday. So if Monday's up or down, why would that reverse? Because these stocks weren't strong enough or weak enough to go with the initial move. Market's up huge on Monday. Okay, here, see all these inside guys? They didn't go to higher highs. What does that tell me? That tells me anybody's long that stuff can stay long because the market was strong on Monday and they'll probably catch up, blah, blah, blah. Now, if the market starts to fail, guess where their stops go? Monday's lows, Friday's lows, boom, 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 right? So when things occur are as important as anything else. All right, DQ. So let's see where we are here. We're at 52 minutes. Okay. Okay, so as we get into here, we're getting closer to an hour. So far, I think we've got a good explanation of the basics of the strategy. The strategy is based on universal truths. First, time frame continuity, right? Because when I say universal truths, I don't want anybody to be able to dispute this. And if you can, you're going to save me a lot of time in my life. But you cannot dispute that something's trading higher than it opened on the month and the week and the day and the 60 that the price has been rising. You can't dispute that. If it's lower, you can't dispute that. Actionable signals, we use shooting stars and hammers, but they're not universal truths. I don't know exactly why they formed. What I do know about them is that if on the hammers, if longs have stopped out and there are shorts against the top of it that have been short that hold, I can expect a move off of it, right? Once it confirms. Now we're going to use that in a combination with the rest of the strategy, and that's why they're actionable signals, but they're not a universal truth because I don't know exactly why it formed. An inside bar, I know exactly why it formed, right? Couldn't go to a higher high, couldn't go lower. It's an equilibrium. There's no question about it. No question about it, right? The broadening formation is the one that gets the most dispute. But you cannot dispute when I say it's a broadening formation because it went to a higher high and a lower low. You can't dispute that. It did, right? And that's where outside bars are very important. One of the things that are most difficult for people to come to me and say, how do I start drawing the triangles? How can I see a triangle? How can I define that? Any outside bar is a fractal triangle because it has to be. On a shorter term basis, it has to be a broadening formation because it took out both the highs and the lows. So on a shorter term basis, we can draw highs and lows off of that. So outside bars are very important to know about. If we go back to the SPY, $60, this rally, remember this? Oh, it looked like hell yesterday. Outside bar, what does that mean? That means a broadening formation. Took out both sides. Now, we want to be aware of that, but anytime it's outside of that and stays up, that's a broadening formation. That's an expansion of volatility. We want to know about that, right? And Trader Girl, which part? Any outside bar is a fractal triangle. You won't know about that. Remember LVLT? Yeah, you wanted to know about that yesterday. What was that? Was that in the video? You bet it was. Bearish engulfing. Why would that work? Why would that work? Because anybody who bought that stock in here and here is underwater, right? And down here, they're in trouble. Outside bar, is that a fractal triangle? You bet it is. What does it look like? It looks like this. Higher high, lower low, higher high, bam, lower low, boom. Gaps down the triangle, expansion. And so if we go back to the SPY, that SPY 60, all right, that did what it did. That was right in here. All right. Oh, the lower highs, the lower highs, the lower highs. Get ready. Boom. See, this was here on a 15er. And once it took that high out here, once it took this high out here after taking that low down, oh, right here. Longs, guess what? Stopped out, gone. Shorts, press. We're going into the lows. I can hold. Okay, at worst, I can hold against that. Ready? Gone. Bam. Gone. Now it's like, okay, well, we can go against this and these and this and this. Guess what? Goodbye. Bam. Stop them out here, here, here. You always want to be aware of where people are positioned. Where are their stops? Right? I mean, that's more valuable than anything. It's like, I don't care what anybody thinks. I don't care what they say. Tell me where your stop is. All right? I want to know about that. And so when you hear, I'm putting a stop on the low of the day, I'm like, good for you. All right? The pivot's the low of the day. Good. I want to know about that. If somebody considers the pivot the low of the day, I want to know about that because I'm looking for the setup to take that out. Because I know you and all your buddies are down there. Ready? Bye-bye. Because especially, and this is, and that might be an okay stop, so long as it's green on the month, green on the week, and green on the day. Then I get that. But if it's red on all time frames, there's no reason to believe that's not getting taken out. Right? And if so, I want to know if everybody's ganging up down there and put their stops there. Why? Because this is what drives price action. Stops going off, people positioned on the wrong side, combined with natural sellers, red on all time frames. That's what we want. That's perfect. Right? We've got aggressive sellers and stops going off. The stops trigger down, and that causes the natural seller to chase because I'm trying to get us. If I have a lot of stock to sell, if I got 500,000 shares to sell, the last thing I want is stops going off and puking this thing. I got to sell stock. I got a phone call to make here in 5 minutes. I've only sold 2 shares and I got 500 million to go. I'm not happy about that. We are, right? We are. Everything's going our way. We don't have to do that. And so oftentimes when people say it went further than I thought, yeah, that's why. Because somebody needs to sell or buy stock when something's going. And if you've only been in the prop world, if you've only been in your own little world and you've never been on a trading floor or understand the technical mechanics of why things are really moving, and you see this all the time, people are like, who would buy it up here? I'm like, a guy who doesn't have a choice, right? Who would buy stock that's 99 RSI and it's going into highs, it's up $50, a guy who doesn't have a choice, right? And that's what we're doing. We're defining where people are that don't have a choice. All right. So on that note, we're coming into an hour. I'm going to take like a 5-minute break. I'll be right back. I'm going to pause the recording, but I'm going to keep it going, and we can get into what I'd like to is, first of all, questions on how far we are doing right now, but then I want to go through the process of how you track things, how you learn this, and exactly when I say something, what it means, how you quantify all this information for yourself. It's great that we have all this information, but it's irrelevant if you don't know what to do with it. All right, so how are we going to break this down? So I'll be back in 5 minutes. I'm going to pause. Okay, so as we continue here, I want to get into when you're beginning to understand all this and what we're talking about and how to learn it. We've been through the basics of the strat, so how can you learn it when there's such a vast amount of information? One of the things you can do is to begin with the broader averages. Say, I'm going to watch the relative strength of the SPY versus the Qs versus the small cap IWM, TNA if you want, and the Dow Jones Diamonds. What that does is it shrinks your universe, all right, to just 4. And saying, do I see any discernible strength? And generally they're going to trade together, generally, but you can start to see definitive strength and weakness there. As you go through that, like you said at the beginning, if you have the time, right? And I get guys to be like, I got to make money tomorrow. I'm like, hey, well, we're going to do the best we can. But ideally, what you want to see, like I said at the beginning, is you want to be able to see things and speak the language of the strat. See how things play out within the realm of the strat. So how you can do that is you can go down to a 1 and a 3 and a 5-minute S&P spider. And when you do that, you're going to see the combinations between the 1, the 3, and the 5. The inside 1 that triggers the Rev Strat 3 that triggers the inside 5. Also, because these things play out so often, here's a 60-minute SPY, and be like, all right, you're going to be able to start drawing triangles like this. Boom, higher highs, lower lows, I want to know about that. And be like, that's pretty steep, Rob. I'm like, okay, well, anytime it takes that out, did it do it? Oh, yeah, it did it on a gap. Or is this important? Yes. Those short-term time frames will play out so often that you'll continually be able to draw triangles and see what's going on. How did we close today? We closed as a Rev Strat fiber. Did we come down from here? Yeah, we did off an inside 5. Did we go up? Momentum 5 hammer. Fill the gap, hammer, slight lower low within the uptrend. Triangle these guys out. This is inside 5 down. You're going to see this play out so often because this is how things work, right? This is the genetic makeup of price action. So although we're watching the monthlies and the weeklies and the dailies for the larger moves and the larger participation groups, because this is the genetic makeup of price action, you're going to see this all over the place, over and over and over again until it becomes second nature. So watching just the 4 broader averages can help you then branch out, because not everybody can watch 700 stocks, and I understand that. Not everybody's mental capacity can do that and say, I'm going to do this, and I'm going to, I can call the audible and Rob says, no trannies, no it's oils, no it's this, no it's this. I understand that's confusing. Ideally, I want you to find a niche that makes you money consistently, and then you will not get worse at this. I promise you, you will not get worse at this. Then you branch out and say, okay, I've seen this a million times in the SPY, I've seen it a million times in the Qs, I've seen it a million times in the diamonds. You can take the diamonds because there's only 30 stocks in there, and a bunch of them are crap. So what does that help you do? Now I can start to gauge the 30 stocks versus what I see in the Dow Jones Diamonds. What do I see here? Is the Dow Jones up or down? Is it in conflict? Who has full time frame continuity to the upside? And then from there, you can break that down into sectors and say, okay, it's Chevron and Exxon. How's Oxy looking? What do we know about the oil sector? Right? UNH, I talk about that a lot. So watching UNH versus the Dow, and then the HMOs versus that. But right out the chute, watching how just the S&P plays out on a 1, 3, 5, 15-minute basis, where you're looking at the combinations because it happens all day long, all right, will help you see things in the terms that you need to see them in. Another thing that some people do that also helps is that a lot of people want instant gratification, don't we all? I want my money and I want it now. Is some people will only trade rev strats. That's it. Because at that point, we're expecting something to happen. Now, with an inside bar, it's an equilibrium, and it could get rev stratted. There might be an attempt to one direction, it reverses, right? But when a reversal strategy happens, when the reversal strat kicks in, we know something's happening. We know somebody tried to take the direction of that price and is failing. We know that. Now, to the extent of how much they're going to fail, we don't know, right? But we do know that that's occurring, and that's an important thing to know. Ideally, we want the reversal strat in the direction of full time frame continuity. Yes, I can. So if we go to FANG today, FANG, that's a bad tick. Up in here, what happened? It gapped down. It goes inside. It broke to the upside. Was not strong enough to break the bar that it was inside of. If this rev strat kicks in, the daily opening was here. Can we expect stops? You bet we can. Here, here, here. And at that point, it changes continuity to the downside. Boom, it's already red on the month. All right? And the weekly opening was close. The weekly opening was 66.04. So, 66.04. So it wasn't going to change the weekly unless it got really hammered. 66.04, is that right? Yeah, so that's a bit lower. But at this point, you're going to have the intraday and the daily going your way, right? Somebody tried to either short cover, just a short cover, and be like, okay, it's not tanking after the opening, we'll just cover it. Okay, boom. But the sellers who caused the gap, still there, right? Caused the gap, back off. Okay, are we getting any higher prices? No. Okay, now go to it. Boom, hit them. Right? So you will see this as you continually watch short-term price action. You'll see it on a 1, a 3, a 5, 15. And then as you learn that more, right, something is occurring here without question, right? That's why we want to know rev strat weeks and months, because we got all month to go after it. There's guys scrambling to get out of something for a whole month. I want to know about that. If I got 5 million shares and I'm trapped on the wrong side, I don't want anybody to know about it, right? But we do, right? What is your primary rev strat intraday time frame for entry? Anything, because we ideally want a combination, right? So we would have preferred that triggered something else, right? Right? We want that to trigger a different time frame. So like Norfolk Southern is trying to go to the upside on the weekly here. Right now, Norfolk Southern's rev strat weekly upside here. So you're like, the market's coming down. I'm like, this is rev strat to the upside, right? So this is on the buy list, right? Was it up today? You bet it was. Green on the day. Is it really kicking ass? No. But it's a situation, it's a condition that we know we want to go to. So on the daily, anytime the closes, right there, there's your daily triangle. Now we want to get through that. Do we have reason to believe we can do that? Yeah, we're rev strat week to the upside, and at that point, we're still green on the month. And anytime we're green on the 60 in the daily tomorrow, you betcha, Norfolk Southern tranny choo choo. So it's not a what time do I prefer? I prefer a combination, right? The reason we want a combination is it shows me on each basis where people are right or people are wrong, and when I enter time frame continuity into it, that I know people are on the wrong side, and I've got natural buyers coming with me. I want everything going my way. Another very simple way to be in the right situation, right? Okay, I'm sorry, let's go back here. So understanding combination, but the 15 might kick off before a 60. So you're looking at, yes, I want that. Is the 60 inside? And if the 15 triggers it, right? Would the Rev Strat 15 trigger an inside 60 down? Yeah, I want to know about that because an equilibrium has been formed on a 60 minute, right? And so that Rev Strat within that 60 minute is the battle within that. So just like an inside month, there'll be a battle of the weeks. Inside the week, there'll be a battle of the days. And the days, there'll be a battle of the 60s, right? Yes, because he's asking, am I executing a trade? You bet I am, because if I'm right, it triggers longer term time frames wherein I can add, right? We want your initial position to be the smallest. We want to add to your winners. And this is a very important point. A lot of guys come in gangbusters on their opening position. Wrong answer. Because if you come in gangbusters on your opening position, boom, you get stopped out. All you're going to do is trim and trail on your winner because you got to get that back, right? I want your losing position, your loser, to be the smallest position you have. Because we can work with a winner. We can add to a winner. Go, go, go. It's still going. Add more, buy more, buy more. No problem with that. But the initial position should be the smallest. In your explanation, I hope this helps. You definitely explained what is happening very well, but to pinpoint price entry better would be helpful. Okay. So what you want to know is, are we looking for an entry at all? Right? First of all, are we looking for an entry at all? So long as this Rev Strat's in force, so long this week, so long as Norfolk Southern is above 70.61, we're looking for entry. We are looking for reconfirmation, so long as that exists, right? So when it opens tomorrow, like today, when it opened today, so long as it's above the opening, it's above the Rev Strat and it's above the opening, 70 or 69.70, it's above both of those. And the monthly opening here, 70.16, as long as it's above those, yes. So at any time that it goes up on any inside bar, anytime from here, boom, inside 15. Now this was tough. There was some news that came out in here, which was tough. They triangled them out. So what you'll notice when there's no news, it's going to triangle them hard. Why? Watch this. You want to try and stay long in this thing? Ready? You got stopped out here. You got stopped out here. Then we're free to go. Triangled them out. Doji, no good. Hammer shooters. So this was a little choppy because you even got that up in there. And I'm not saying it's not going to, because you got to get outside of this was the problem. But in general, then I'm looking for combinations on the right side, whatever, and a narrowing inside bars for a breakout. Yes. Yes. So long as the other conditions are still met. Right? Are we trading something like if we are looking for, and this might help you. This is the other point I'm going to make. My research from day one, no flags, no, like I said, don't call them flags. Inside bars, I want you to speak the language of the strategy. Throw out all the other garbage, right? So, what can help you immediately? Right. So, what can help you immediately is that from day one, why my research was based on something from day one. 25 years ago, was looking at what do charts look like of stocks that go up a lot? What does charts look like of stocks that go down a lot? Right? And so the first place I looked was right after the opening, looking at the percentage gainer list, the dollar gainer list, the percentage loser list, the dollar loser list, and staying on that list. So if trying to track all the actionable signals that I give you in the video and all that is difficult, right out the chute, the first thing we do in the morning, first thing we do is we track the gaps. Why? A gap in itself is baked in volatility. That we want. Once again, price can only go up, down, or go sideways. But if something gaps, we know somebody's trapped on the wrong side. Definitely. Now, either they're going to put up a fight or they've exhausted it. Gap and reverse or gap and go. And if you look like I have for 25 years at the percentage gainer list, the dollar loser list, the dollar gainer list, the percentage loser list, oftentimes a lot of them are gaps, right? Other times, they aren't. But most importantly, those are things that are on the move. We want to trade something that's on the move. Many people's tendency is just, I need to get it before it moves. That's wrong. They don't know how to get into a trend once it is moving. I need a pull in, but they don't know what that, they can't define that. We can define that. We can define what a pull in looks like. A down 60 that then goes green again when all the other time frames are green. That's what a pull in would be to us, right? We've defined it. So we ideally want to be on things that are on the move. The problem that most people have is they don't know how to do that. If you've read the chat and you see how most people handle something like that, you see that thing, it's up $20. What's the first thing that they usually say? If that thing goes up $40, I'm going to short it. Wrong answer. Right? Wrong answer. This thing's on the move. Let's get in on it. Let's go. As long as this thing's going, we're in on it. There's no reason to believe it's going down if these conditions are met. Make sense? Good, good. And so when you think in terms of what I've spoke all night, right? When you only think and speak in these terms, things become quantified. They make sense. And when the two of us work together, you, me, and the community, that's three of us, if you say something that makes no sense, you're going to know it. Like, that makes no sense at all. Like, well, I'm just, I got a feeler. Wrong answer. I'm doing this because. I'm doing this because. And when you're communicating with me, what do? I'll tell you what you're up against. You got 4 minutes to the flip. You're going to have to defend this. However, if you got in here and you're still at a profit, your stop can go here. We can give a little room if we have evidence going our way. Okay, so on Viacom, right, good. So on Viacom B, and I want to be clear about this too. It's equally as important. Let's say that when the SPY took, it's equally as important to know stocks that have full time frame continuity to the downside, even when the S&P has it to the upside. When I talk about identifying natural buyers and sellers, I know there's a seller. There's no question about it. If the S&P is going up and something in the S&P is full time frame counting the downside, there's no question about it. Sellers are in there, right? And so with Viacom B, the tricky part of Viacom B is the difference between entering a momentum move and catching the top of a triangle. So here, if we look at this 15-minute bar, this 15-minute, right? What do we see? We see an inside bar, rev stratted to the downside. It attempted to go up and got rev stratted. Can we expect that rev strat to happen? You bet, because when it occurred, it was down on the 60, down on the week, down on the day, down on the month. We can expect that to rev strat. Boom, short here, right? Here, it rev stratted again, right? This is the 15er. If we go to 60, puke hard, inside 60 down twice. Never took a higher high, right? Okay, and so, right, so the entry is breaking these inside. So, depending on, like I said, I want to work with you individually. I don't know everybody's risk parameters, right? Ideally, we want to be small because if, let's say that you're going to give this thing the whole 60, right? That's a big bar. Say I'll do it on 10 shares. I don't care. However, when it starts doing it again, I can hit 20 shares. Or I'm a big shooter. I hit 1,000 here. I hit 2,000 here. Bam. This thing never had a chance. Didn't make a higher high on anything. So, Sadie, basically, on when the 60 breaks, we're looking for the difference of combinations on stuff, right? Ideally, I want to put a stop on the bar on the high of the bar that breaks it. I don't want this thing to rev strat on me, right? Because at this point, this is momentum. This is going down, right? That's momentum. So it's a very small triangle as opposed to coming off here where I know it's top of the triangle because it's taking out higher highs. This is momentum. It's got to keep going. Otherwise, I'm going to get triangled out. It's going to come up into here and then fail, right? Biker, how you doing, man? I actually sent out some of your notes today just to help the gang. So, right above the top of this 60 here, that. But you can also combine it with shorter term time frames if you want to tighten it up. But at this point, there was no reason to believe that wasn't going to work. Outside of per the strat, it's going into lower lows. And anytime you go into lower lows, it could triangle right back up. Right? Because at this point, anybody who's long is out and anybody who wants to be short could be short. But the good part is, where did this move come from? Right? Where did this move come from? This move came from this. Oh, yeah, triangled them big up here. Right? Stop them out, stop them out. If you tried to short this thing in the last 2 weeks, 3 weeks, stopped out, stopped out, stopped out. Last week, stopped out, nobody short. So on a weekly basis, you're coming off the top and then dumping, right? And it did it here too. A dump, triangle them out, inside week, see you later, bye. See you later, bye. So that's why you want to look at all the time frames and say, where's this thing coming from? I don't think it was inside, but it was. If had this been inside, it would have been a rev strat monthly to the downside as well. You can see this monthly break here. Right, had news, first day down. Right, people are scrambling. They're nervous. In this market, you want guys who are nervous. Guys who are in this were scared crapless. I'm like, okay, keep the heat on. And so what would occur is that any time that the market rallied, over the overall market rallied, and you got these inside 60s, they're like, okay, Okay, well, I'll stay in. My stop goes here. Bam, you're gone. Okay, I'll stay in, but my stop goes here. Bam, you're gone. And then finally, it just threw in the towel. This thing ain't rallying. Peak. All right, these guys are fighting to stay in there anytime the market was rallying. Not happening. And there you go, MD. And this is another important part too about the community. MD does exactly what I've been talking about as far as the percentage gainer list, dollar gainer list, loser list. Goes straight after it. The gaps. That's all he does, right? And that's a very lucrative way to go about this. You don't have to be a super genius to see something that's bright red or bright green and go after it. If it triangles you out, so be it. You can either try and get back in once it starts flipping back red, but if you've been trading for any amount of time, how many times have you said, oh, I got out too early, or it went further than I thought? Yeah, we're those guys, right? Because you didn't have an exit strategy, the trim and trailer park. And so that's why MD's like one and down at 10:09 after I called it. Add Rev Strat 5 at 11, 130. Was beating the crap out of this thing. Once we have something on the move like this, you can look to add and just pound it till kingdom come, right? But if you start adding to a loser, yeah, you got issues. So on the monthly, the green candle adjacent, let's go back to the monthly. Green candle, better red combination because all those longs are stuck and turned to sell. So here, right here. So here you got the monthly big haymaker, crush it. Here's a rev, and this one's one of the important things. Like with any chart, and like I said, when you want to learn this, you go to that short-term 3-minute SPY, 3-1. But you look at any chart, you need to look at everything the way I'm talking about, the way the strat works, right? So here, slight higher high, slight lower low hammer. That's a triangle in itself. Hammer up. Shooter doesn't confirm, goes up, goes inside month, goes to the upside. Shooter fails within the strength here, right? Then here, goes inside month, tries to go up, outside month. There's your fractal triangle. Outside month. Below that, you got problems. Fractal triangle here, inside, up, back in, rev strat down, right? Once again, outside month, takes it to the downside, pops back in, but then goes inside month to reconfirm the fractal triangle down, inside month back up, doji month, not quite an inside month, but then outside month, a fractal triangle there. Anytime you're at lower lows, you're going to see this thing. So the green candle adjacent had better than a red combination because all those longs are stuck and turned to sell. So here, yeah. So here, down here, anybody got long in here hoping that they caught the lows? Gone. And anybody's trying to short this got stopped out against those monthly highs, comes down. So that's a very basic look at it on a longer term time frame because we can look at how it played out daily, weekly, and so if you go down to the daily, you'll see this. You're getting murdered in here. And this is why oftentimes you'll hear me call trades off. And I'll say you're going to get murdered in there. Why? Tight triangle, really tight. Triangle needs to grow. In a tight triangle, you're going to get killed. Why? Because it's like in a war where it's hand-to-hand combat. We're the generals looking at this thing and be like, that's hand-to-hand combat. You get killed in there. I'm like, okay, well, those guys are jumping out of that building. Let's send some more guns in there. Let's send some more guys in there. Okay, there, send some more guys in there. Send some tanks in there. Okay, it's still even. All right, send more. Send this here, and we'll flank them from there. All right. You know, I've had enough of this. We're going to send it in the nukes. Bam. That's the triangle going bigger and bigger, backer, bigger, backer, bigger. Boom. We want to wait for the war to be over. I don't want to be infantry to find out if there's ground troops that I got to go fight. So you let the triangle grow, and then the full time frame continuity kick in, and there's no reason to believe we're going to lose on the trade. No reason. And Biker, thank you very much for coming. Biker's notes are extensive, and certainly someone who took their time to understand all of this, right? He took as much time as anybody to sit here and listen and understand. And he does trade other aspects But as far as he's concerned with me, he took his time to like, when Rob says this, this is what that means. This is what, when you look at anything and you look at this and say, what is all this? And say, okay, I think in terms of broadening formations only because that's all that there is. There's price discovery. Triangle within the triangle here. Higher high, lower low, higher high, inside bar. Boom, down, lower low, goes up. Only takes out part of that. Lower level triangle. Here and down, right? Yes, Biker is definitely a model for success. And I want everybody to be there. But most importantly, how you're going to get there, it's my firm belief that you work directly with me and that you understand that this is the truth. This is how price action works. There's nothing else, right? There's nothing, everything's quantified. So, another important point that I wanted to make is that I'm a very excitable boy, and I, as best as I can, as I do my best, I still get excited about market movement. And so, when I say things, it's very important to take it all with a grain of salt within the realm of the strat. When I say something's going to a new high, that's going to highs, that's going to highs, that's going lows, that's going to highs, goes going lows. Does that mean to jump in there? No, it certainly does not. What I'm doing is I'm processing a lot of information in a short amount of time. What is that information telling you? Is something strong because it's going to a new high? Maybe. Might be exhausting. If it doesn't, it might be walking into a triangle. I don't know. What I'm trying to do is I'm trying to gauge the strength and weakness in the market. And one of the more difficult things for people to do is be patient. So when something's going to a new high when the market's going down, do we buy it immediately? No. Is it on the watch list for the 60 to flip back and go green? You bet it is, right? Anything taking out the highs over time, I want to know about. But I don't want people to get caught up in my speak as I'm speaking through. I'm trying to figure things out during the day, all right? And so on the opening, you'll hear me shouting a lot of things, the one or three or whatever, right? And not everybody's cut out for that. However, you will listen, and like when we had this earlier conversation, should we hold back for an hour? Should we hold back for 15 minutes? Should we have 30 minutes? You will hear me discernibly figure things out when I figure it out. And I don't know how long that takes. And I might pull back and say, I don't know. Don't know. There's things going up, going down. We don't know. But oftentimes you will hear me discernibly figure something out and say, these are definitely stronger. These are definitely weaker. Get on this. And so, like I said, tonight is a very basic overview. And as you get more advanced, we will break from that broader average, Qs, Diamond, SPY, IWM, down to Dow Jones 30, and then to all the sectors and the subsectors. Right? When I say this, this means that. When I say OIH is weak, I expect you to know Schwab, Halliburton, HP, Baker Hughes, NOV, right? But that's advanced. And like I said, tonight is about the basics of how can I get you up to speed as soon as possible? How can you learn this as soon as possible? And the way you're going to learn it as soon as possible, bringing that universe down. watching and drawing the triangles on a short-term basis of the 5-minute, 3-minute, 1-minute SPY, tracking things off of the video and not necessarily trading it, but watching it again when the market closes, watching that percentage gainer list, dollar gainer list, percentage loser list, dollar loser list. 1, 3, 5 drawing triangles, right. And so because not only are you going to learn to draw the triangles, you'll learn to see them. So we went to the 5-minute SPY. What did we know coming in? What do we know coming in from yesterday? We had a 5-minute triangle. Higher high when we opened, hit the slight lower low. Remember, rallied back up. Then we gapped down, took it out slight higher high. Then within that was a triangle within the inside. Took that out. That's going to help you to, yes, they move quicker. And so, no, not drawing triangles mentally, drawing them physically. Any higher high, any lower low. And then when you're watching a 1 and 3 and a 5, you're not only going to see these triangles play out and start to draw them, what you're going to be able to do at that point is you're going to see the combinations. You're going to see the inside 1 that breaks, or the Rev Strat 1 that breaks the inside 3. The Rev Strat 3 that gets triggered by an inside 1 that breaks the inside 5. You're going to see the combinations play out all day long, constantly. So mentally what I want you to do is I want you to be able to see that, because when you see them on longer term time frames on other stuff, it's going to be second nature. You've seen this played out a million times, right? So when you watch the SPY short term or anything that's really active, Facebook been great, you're going to see things and only in terms of the strategy. And then when you watch this, you don't have to trade it. You don't have to trade it. You just sit there and watch it. Watch that 1, 3, 5 SPY. Like, okay, any higher high, I'm drawing triangle. Any of this, and you're going to compare it with what I'm talking about. Rob, I see this. I'm like, okay, that's fine. That's good. Then knowing on the longer term time frames, am I inside on a longer term time frame? I want to know that, because at any change of continuity, I expect a reversal. No fib. This is truth. Alvin, I understand this is basic session, which is great stuff. Do you do advanced session that covers more advanced topics, going through things like when you say this, you expect us to know that? I will on Thursday. So tonight, what I'm doing is, like, I feel guilty when I take time off, because, especially when I've got new people, and I always do, I don't like to take time off, but I need it. So I'm taking next Wednesday, Thursday, Friday, and the following Monday off. So I'm doing this session tonight. I'm doing a Thursday night session, and then President's Day, the market's closed on next Tuesday. I'm doing another night session before I take time off. So yes. No, there's not speed lines. These are higher highs and lower lows. So anytime that a bar closes, I can draw a new triangle. So if we go down to 3, what do we see? Inside 3 down, took slight lower lows. That's a triangle up, right? Inside 3, inside 3. Inside 3 went down a little bit, then fell apart. Triangled out, right? So triangled out, because what you're going to see is anytime that you see a spike low or low, this is a Rev Strat 3, goes up, takes them out. Is you is or is you ain't, my baby. Yes, Thursday night I'm doing a night session, and next Tuesday. Right. tonight I wanted to get as many new people as I could possibly get here, because this market is great for trading. And if you're suffering in this, you got to know this. This has been some of the best trading we've had in years. Right? So if you've had a tough time in January and February, you got to know this. This is some of the best trading we've had in years. And if you're going to trade for a living, why would you not want to know this? If you're already successful, this is going to make you better. If you're struggling, this is why. I'm going to explain to you why you're struggling. But yes, I'll be back Thursday night and next Tuesday. But so when I say fractal triangle, see this lower low? Boom, 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 lower low, boom, higher high. This is a fractal triangle that stayed within the triangle here on the 3 at the end of the day. How do I know that? Let's go to the Warner. Lower lows. Outside bar, Warner. Coming right into there. Actionable signal hammer. This here, boom, 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 and that chop them up, but good in here. Why would it chop them up and chop them up in there? Because it's still inside on the 60. My pleasure, my pleasure. And so T3 Wadaki, any higher highs or any lower lows. And so we can get into, if I have to add another night session, I'll do it. Because a lot of people have trouble with the triangles and drawing them. And what I'll always say is that most importantly, you want to know where they would occur. Anytime you go to a higher high or a lower low. Udaki, that's right, PP, right. And so we'll get into more advanced. Hopefully that tonight that a lot of you got a basic understanding of how it works. Biggest problem then now is arranging these charts so it's clear. Sure. So I need you to have, once again, one screen dedicated to a monthly, weekly, daily 60, 30, 15, 5-minute chart. Right? So that when you're evaluating anything, that's what you see. Many people will just come up and say, I don't trade on I don't swing, I don't this, I don't have to look at the monthly or the weekly. You're out of your mind. That's a longer term time frame. You got to know that. That should be basic. Hey, if it took 2 years, it took 2 years, Scott. So that should be basic. Okay. How much history do I need in each? Actually, if there's one chart that had each bar from a same chart. Okay. So if you want to be real basic, when I first came to T3, what I said, see the 60-minute bar? All you need is one chart, one bar. But actually, what you want to do is go 3. 3. Why? Because there's no setup that takes longer than 3. So if you look at, if you only have so much screen space, go to 3. 3 will show you whether it's inside, whether it's a rev strat or not. Right? So at this point, you're like neutral. Neutral, as long as this 60 was inside here, neutral. You're not getting any futures help. Each slice time frame on one chart. Okay, well, like I said, on the longer term, now I want you to be able to see the triangles over time, but in just the actionable signal and time frame continuity, all you need is 3 bars. So if you've got limited screen space, monthly, weekly, and daily could be on 3 bars. That's all you need to know. And 135, you want to be able to start seeing triangles. If you're going on those shorter term basis, you need to go on the triangles because you need to know whether you are momentum buying or momentum selling. Are you going into new highs or are you going to new lows? Did it just correct and now is going back your way? No, I understand that. We can clean that up. I mean, that's plenty of room, plenty of acreage. So the question is, what are you trading and how are you going to do it? It says 6 monitors, not 6 monitors. That's plenty. So how are you breaking down what to trade and how to go after it? First things first, and I really want you to just understand why you're doing things, right? Like I said, tonight's basic. I'll be back Thursday. I'll be back next Tuesday. Basically, I want you to understand the mechanics of why and how things are working. This is how things work. So I just want you to be clear on that. Tonight is just about the basics of the strategy and totally understanding how and why things work. Thursday night I'll be here all night long on those mechanics of setting up your software, your hardware. What do you have? We'll be all over that. And next Tuesday. Tonight I just want to make a video on the basics of the hows and the whys things work, throwing out anything you thought you knew, because everything's going to line up with what I'm telling you tonight. Good. And so on that note, I think we've done a good job for this. It's an hour and 46. And we can do more of this again. But like I said, I'll have another night session on Thursday, another on Tuesday. But I wanted this to be at least a basics of the belief of two-person job, the basics of time frame continuity and actionable signals, how things work, how to track it. And I think we've done a good job tonight. So on that note, I think I'm going to leave it off there and get this video to you. So everybody have a good night. I will see you on the VTF in the morning, and then we will do this again Thursday night with a little bit more complexity. So thanks for everybody coming out. Always really enjoy it. Everybody, this is dedicated to my pop. Passed 2 years ago today. So everybody have a good night, and I will see you bright and early in the morning.